more insight on China's economic prospects, we have Dan McClory. He's Managing Director and Head of China for Boustead Securities. Dan, welcome to the program. So it looks like the good news for China, exports surged by 9.5%, biggest jump in 18 months, clearly beating expectations. Before we get to the not so great news, let me get your reaction.
Well, I think it's a good example that China has continued to get its production economy back into play, in effect. So manufacturing has obviously led to these exports, so that's clear that there's been a relaunch and a resurgence in manufacturing. And also a number of those exports have gone to what we would call the upstream nations, the ASEAN nations, particularly including places like Korea and Japan, in addition to the U.S.
Okay, so the not so good news, imports fell by 2.1% compared to August of last year. What does that tell us, Dan?
Weak demand, weak internal consumption. I mean, this is one of Mr. Xi's priorities. He's really trying to drum up internal consumption. China had done a great job of rebalancing its economy from manufacturing to services and domestic production. But clearly, coming out of COVID, consumers everywhere, and especially in China, are very wary. So they want to save. They're not sure what's going to happen next. And frankly, the domestic stimulus that China deployed was very unlike that in the U.S. It was really designed to get companies back as opposed to consumers. So I think that's why we're seeing that weak demand for imports.
So when do you think Chinese consumers are going to start buying again?
You know, I will say it's equal parts psychological and also financial. So just feeling that things are back, feeling that their jobs aren't at risk, feeling that the domestic economy is really returning. I mean, those are all going to be really important signals. So, you know, clearly China is leading the world in coming out of COVID. There's no question of that. But what we're seeing is caution on the part of consumers.
Let me move on to the Phase 1 trade agreement between China and the United States. Where do things stand with China's commitment to purchase large quantities of corn and soybeans?
Well, it's directly related to and constrained by what we just got done talking about. If there's not domestic demand, if consumers don't want or need these things, they're not going to be bought and put in ships and rotting at the ports. So it's really the other side of that problem. So consumer demand has to come back, and then China can resume these purchases. But right now it isn't. And so that's obviously led to a cutback and an inability to meet those commitment levels that were previously agreed to.
Let me move on to the Yuan. Predictions by Morgan Stanley, I'm sure you saw that. They're predicting the Chinese Yuan by 2030 could become the third largest reserve currency in the world, behind the U.S. dollar and euro. What do you think about that?
I certainly wouldn't be surprised to see that happen. Again, we're in this sort of post-COVID world, so we've got to see how everything plays out. But just look at the statistics we're talking about today, which is primarily exports. Well, increasingly, those exports are going to be paid for in yuan. And it could drive the advent of the yuan becoming a reserve currency of the world. Clearly, it's going to be based on the comeback story, the return, the rest of the world being able to come out of COVID and purchase like it used to. But in terms of trading volumes, you could certainly make the case for the yuan to be one of those three major reference currencies.
All right, we'll leave it there. Dan McClory, thank you.